Howdy, everybody. How you doing out there? What is this? Maybe it's morning for some folks. Could be evening for other folks. Either way, how's everybody doing? Hello, Carol. Thanks for letting me know that there's sound and chart. Appreciate it. Let's see. Over there, we're getting good sound and chart. All right. I think we are. Cool. Hey, David. Hello, David. Good morning, David. Good morning. Good morning. So, let's do a quick little poll. Just yes, well, just the two words to type. One of two, not both. One of two. Are you bullish or are you bearish? Anybody want to throw something out there? I've got one bullish there, a mix, which, okay. Mike is bearish, okay. Bearish over there, okay. Mildly bullish, okay. No one can stick with just bullish or bearish, huh? Okay, so let's think about that. So for those that are bearish, please take your time and explain why. Because we are in a bullish trend. Now, with that said, it is important for every trader to have, I'm going to look at a naked chart to start with here, and we've got nothing there, okay? So it is important for a trader to declare what you are, just like we just did, okay? Declare what you are. This is important. And to go along with that, it is important to declare your standby chart, okay? What is your standby chart? In other words, I'm going to put the Trendicator back up there. There we go. Here's my standby. And under no circumstances is this changeable for me. I'm very hardcore about this. And I've discovered that I'm right more times on trade if I do this. That is, when those red dots are red, bearish. When those green dots are green, bullish. Now, I'm not trying to take away from the big picture here. I'm not. But then again, I'm a short-term trader. That's another one that goes in that declare column. Declare what you are. I just declared what I am as far as a trend goes. I declared that below that, which everybody knows, the big secret. For me, it's just the 17 exponential. It could just as easily be the 20. In fact, it could be whatever you want, okay? It's your trading, your chart. You're the one that declares bullish or bearish. So you have to set it up how you want it. This is the way I want it. So I'm declaring bullish in a bearish market. I'm going to declare that for me, my trading, that we have a high, and just let the line go. It happens to touch this other high. So I am bullish on this move here until it's not. So it's important to declare this. Man, I think this is so important. Okay. And for somebody that's using this bearish line, then I will assume that you've got no long trades on. You do not plan to take long trades. You are going to bearish. You declared it. So you're going to wait till there's a bearish reason in price action, or maybe some trend line is crossed before you enter shorts, because nowhere in my imagination can anybody be looking at this and thinking bearish and buying bearish trades right now or I have bought bearish in here because right now you're getting hung out to dry. Your pain threshold has got to be massive right now. Okay? So, and I'm not at all saying here that we're not going to turn bearish. I'm not at all. Like I said, I declare that longer term bearish, shorter term bullish. I declare that I am a short-term swing trader. So this is like me washing my hands, and I'm washing them in front of everybody. I'm airing my laundry out. This is what I'm going to do. As long as the trend is up short term, I'm going to trade long. The closer we get to that trend line, the more concerned I'm going to be. Now, I think everybody else also knows that I use a lot of moving averages. So, as we approach the 50, I was cautious. We're over the 50 now. I'm not quite as cautious based on this, but I am utilizing that area right there as a stop. Below that, believe me, I'll pucker up something fierce. But right now, there's not one doggone thing about this chart that's bullish. Not one stinking thing. Bob, you wrote FED question mark. What is your question on FED? Which I know you mean the Fed. But what is your question? What is your question? Let's see here. Doll, is it possible to change font size on the scans? Do you mean the scanner? Is that what you mean? Yes, it is possible. I don't know why this is happening to me, but it is. Yeah, it is possible. Let me show you how to do that. Right there. So in a scanner window, simply right-click and then go to Options and Style and left-click. And you have to uncheck this, okay? This will lock it. So just uncheck it. And then right here, font size, watch my font over here. I'll make it nice and big for you. We'll go up to 22 and say okay. There we go. Look how big that is now. So yes, it is very, very, very doable. Okay? You're very welcome. Thank you very much for asking. Appreciate it. I'm going to put that back over there. So Bob is asking me the Fed crash or not. Bob, you do realize that I can't answer that question, don't you? I mean, I don't know. You know, let me set the scenarios up, okay? The scenario is, first of all, I don't think anybody thinks that we're not going to get a rate hike, okay? I don't think anyone thinks we're not. So there's a known going into the Fed notes tomorrow. What we might not know is the language. What we might not know is they may say, okay, we've got our rate hike, but going forward, we're going to only raise 50 percentage points. And not 75. They may say, okay, we're doing 75, but we're going to do another 75, but we totally see that everything is working. Well, that might make the market go up, right? Well, I can't say that's what they're going to do. On the other hand, they could say, holy crap, this is not working. Yeah, we're going to raise 75 points, and we're going to double that next time. Holy cow, the market's going to tank like a rock, right? But I don't know. I don't know what they're going to say. So let's talk about this as a trader, okay? And I can't talk about what Bob might do, or Dahl, or Phil, or Justin. And yes, Justin, we will go over that. I can only talk about what I'm going to do. And here's what I'm going to do. I'm not going to trade. I don't have an edge. It's important to trade with an edge. I learned some time ago that I don't have to trade every day. This was one of those lessons that it cost me before I realized it. I don't have to trade every day. If you're in a dicey trade, why hold it over all this? Why? You know? So the safe play for me is don't be there. I've made no trades today. Nothing long, nothing short. Still holding what I've been holding, okay? Still doing that. But I may rethink that idea as we move into that magical 2 p.m. time tomorrow. I might rethink that. I might add a trade. But overall, why would I want to fight that sort of thing? I don't have an edge, and it's important to have an edge, all right? So I hope that helped, Bob. I wish I could tell you. I really do. But we don't know what the answers are. Now I could stand on my pulpit, which I am standing on my pulpit, obviously, and I could say, market's going to tank tomorrow. I've got a 50-50 shot of being right. And if I'm wrong, I eat crow. If I'm right, I get back on the pulpit. I say, I told you so. But that's not right. That's wrong. That is 100% wrong to say, I think, in my opinion. The right thing to say is what you know. And what I know is I don't know. I have no idea how this market is going to think about what the Feds are doing. I know in our recent past, the market has gone down. I do know that. Does that mean we're going to go down this time? I can't guarantee it. Does that mean we should run out and buy puts everywhere? I don't know. I'm not going to say that. Because I think we need more than a 50-50 edge. And more than just guessing. So I trade with the charts. That's it. I have discovered that if you take all the BS out of the market and just trade with the charts, you'll do much, much, much better. So there's my 2 cents on that, okay? I'll get off that pulpit. For whatever it's worth right now, at this moment, the sellers are taking a big bite, and one of our indicators is sinking just a tiny bit. But that could be just a for the moment type of thing, okay? Justin asked, can we go over a pre-configured bear V-stop 3/8 scan? We sure can. Thanks for asking, Justin. Let's do that. So what I'm going to do is come over here to the LTA main application window, and I'm going to click on this arrow right here under pre-configured alerts, and then we're going to go find that. What was it? Bear V-stop 3/8. So we're going to look for bear. Oh, right there. Bear V-stop 3/8. It's number 2 on the list. By the way, that does not mean that this is the best one, second best, third best. It's not what that means. It just means it was the order they were put up. There is no logic to the order. This just happened to be the first one up there, okay? This just happened to be the last one on there. So bear V-stop 3/8 trap. Let's go over that. It's actually a pretty good scan. I think everybody knows that one of the favorite alerts for both right-way options and hit-run candlesticks is a 3/8 trap. The V-stop scan, that's a favorite of right-way options. Maybe a favorite of many hit-run candlestick users. I personally do not use it. It doesn't mean that it's bad. It just means I don't use it. That's all it means. But we'll certainly talk about it. So I've got it loaded here. All you have to do is click on it, and it loads it right up. Well, all we have to do is pick out a watch list, and you can see that this automatically, it comes up on the CBOE 400. I'm going to change it to the all. And what I'm going to do is hold the control key down and then check this one right here. And I'm going to hold the control key down and then left mouse click and take it off right here. Notice there's 37 stocks that meet the qualifications. Now, I know that there's no volume or anything on this. So I need to add some, otherwise we're going to get a bunch of junk in there, and I'd rather not have junk, okay? So I'm going to add on the plus sign, I'm going to left click, and I'm just going to start typing volume, VOL, that'll do it. And that will take you to the volume alerts or anything with volume in the name of it. And this one right here is the one I want. It's called minimum recent volume. As far as volume scans, it is without a doubt my personal favorite. I'm going to left click on it. It comes out of the box 50 and 250. What that means is over the past 50 candles, each day has done at least 250,000 shares of trading. I'm gonna leave it right there. Now let's talk about everything else that's in here, and then we'll go look at charts. Okay. What I'm going to do is name this Justin real quick. And then in lieu of time, I'm going to go ahead and create this window and get it working. And then we're going to come back and talk about it. So, and actually what I'm going to do, because there's only 21 charts showing up, I'll show you what I'm going to do. I'll show you. After we go over everything, I'll show you what I did. There we go. So let's start from the top. We're now looking at everything in LTA, U.S. stocks. And now let's take the bear 3/8 trap. And if we come over here, you can see it's already set up. So we're looking for the low of the 3 exponential moving average and the 8 closing. So we want, what this is really saying is you want the 3 exponential moving average to be below the 8, and you want price to be between those two moving averages. That's exactly what that is saying right there. The V-stop, it's already preset to the normal V-stop settings that we use. Not that they're the absolute best. I could no more tell you that, the man in the moon. I know that Ed and Doug came up with these numbers, and they seem like they work pretty darn good to me. I have felt no reason to mess with them whatsoever. They work fantastic. So we'll leave those right where they are. And this is saying it's got to be within 3% of the V-stop. That's all this is saying. Black candle is simply saying that you want a bearish candle. In a nutshell, that's what it's saying. We use black and white charts, so that's why it's a black candle. It's a red candle for those that use a red and green candle. It's the same candle. We just use a black candle and white candle, so that's why it's named black. And then we already went over the minimum recent volume. 50 days, 250,000 shares traded over each 50 days. You can see there's 20 stocks that are showing up on this. Now, what I did was, when I said, just a minute, let me go get this thing cooking, give it time to get some tickers through there, is I came over here and changed it to 15 minutes down here. What this does, well, darn it. Okay, I'm not going to do that right now because it'll close everything out, and there's actually tickers coming through there, so we'll leave it that way. What this does is it says for every new high, I'm going to go ahead and do it, darn it. And for every new low on the 15-minute chart, it will alert, all right? I'm going to save this. And that's all right. There's still going to be some come through. There we go. So nothing up here changes. Everything up here is on the daily. You see where it says daily right here? Each and every one of these will say daily, because I want everything on the daily. If you want to put it on a different time frame, all you have to do is change the time frame. Click on that down arrow and change the time frame. You can do it individually for each window. If you want it to be set to all the windows, just click that and it'll automatically change it to all if you want to change your time frame. Really easy to do. Super easy. Super easy if you've done it before. If you haven't done it, it can be a little bit aggravating. It's like anything. anything at all. It aggravates. I wear a lot of t-shirts with pockets. A lot of t-shirts with pockets. When they don't have pockets, I'm aggravated. I can't figure out what the front is. So, I mean, it's just like that, all right? So, let's cancel this, and let's go look at some of those charts that's showing up. And I will, let's see. For those that don't know, if you right-click, you can make this stay on the top of your screen by clicking Stay on Top. Dahl asked earlier, can we make the tickers larger? You can. Right-click, go up to Options or Style, take the check mark off. You can make this bigger right here. I like the alternating colors. You'll see what I mean. When it shows up, I'll show you. I like a white background. I used to make it all colored and change and different things. It's steps that I find it's useless to make unless you just want different colors. And the reality is I don't really care about different colors. So I just keep it like that. And there it is. All right, let's go excuse me. Let's go take a look at some of these. Whoops, what happened here? There we go. Excuse me, and you can see it got larger here. So, we'll go look at Navi. There's Navi, and let's go to a V-stop chart. There's a V-stop chart. Let me get rid of this. And let me get rid of this. And let's put the 3 up there. We'll make that the 3. And we'll make that color. Let's make that blue. And we'll make that low, because this is what we're looking for. There we go. Exponential low. There we go. So, here's what we have. Price is between the T line and the 3, and we're below the V-stop. Let's look at RL. Price is below the 8, above the 3, and below the V-stop. Does that nail it down there for you, Justin? Anyone have any questions with that? You're very welcome, Justin. Thank you. Some things that if you wanted to add to this, for instance, notice in here there was no trend. Maybe you want to add trend. You could type in trend if you want. And this was one of the very first scans, bear trend. And what this is a 34 EMA trending down. So I'm going to go ahead and just do that. It'll take it a minute to perk a little bit. Something will come through here, I'm sure. Very easy scan. The scanner does not trade for you. It does not tell you you should buy or short this particular chart. That's up to you to do. But what it does do is it takes what you like, because you set it up to what you like, and then you trade what you like, whether it's long or short. There you go, right there. 34 EMA is trending down, a nice bearish trend. There's your trap right there. There's this, I don't know. It blows my mind on the scanner. It truly does. I mean, how can you look? There might be reasons why somebody doesn't short this. Okay, I'm not going to get into that. We're just looking at the scan. But look how simple that is. If it came back above the T line somewhere up there, that's where your stop would be. You're making money when it drops below the 3 EMA. It's just not. It's just not rocket science. Just is not. So anyway, let's look at one more, and then I hope everyone has tons of questions. It can be about a chart, it can be about whatever you want it to be about. Now that one's not right. Oh, that's because it's not the symbol. HYMB. There we go. HYMB. Kind of look like that other chart. Once again, we're between the T line and the 3 EMA. We're below the volatility stop. You can see the volatility stop is red. I don't know how to make it any easier. You as a trader, you do have to decide where your stop is going to be, and you do have to decide where your profits are going to be. So, all righty. Questions? Any questions whatsoever? Weather tomorrow? Weather next Friday? Whether or not the market's going to be bullish or bearish? Let's see, Justin, my definition of a uptrend is a pattern of higher highs and higher lows, measured swing points. Can you find this in LTA? You can. Ed, if you could point me in that direction, give me the keywords. I don't know everything in the scanner. I don't begin to know. In fact, I don't even try to know. My job is to look for what I like, what I do, and I can take it from there. But if Ed can point me in the scan, I can put the scan up for you. Not a problem. But you can do that, Justin. Yes. Let's see. Andre, 3/8 is losing volatility the longer a trend goes. 3/8 is losing. I don't understand what you're saying. 3/8, the 3/8, I assume the trap, is losing volatility the longer the trend grows. I don't understand what you're saying. The word losing is kind of throwing me because actually the higher the trend goes, the 3/8 trap rocks. The lower the trend goes, or as the trend rise, I should say, and it can stay as long as, it could be 5 birthdays from now. I mean, as long as the trend is a trend, the 3/8 trap rocks. Oh, validity. Oh, okay. I'm sorry. I thought you did mean volatility. Well, I have to disagree with you there, Andre. Or maybe I'm just not completely understanding your question. The 3/8 trap does not lose validity the longer the trend. A trend will stay a trend until it's no longer a trend. Price drops into 3/8 trap. It's a buy as long as the trend continues to work, okay? So I'm afraid I have to disagree with you on that one. But that's, we're all traders, and it's okay to disagree. Anything else? What else? Oh, let's see. Robert, what about Google? Well, that's kind of a pretty broad question. Google's got a bullish engulf yesterday and holding at the top end. Do you have another question on Google? You might want to share if you're long Google or you're short Google. I'm going to go back to this chart because this is the chart that I use and that I like. So while you're, long Google. So let's talk about rules for being long. I don't know what your rules are. Let's talk about rules being long. Do I think it's wise to just buy a bullish engulf at what you might be guessing is the bottom? And I'm going to say no. I think that's a horrible idea, tell you the truth. Would buying above that bullish engulf be a good idea? That's a good basic candlestick rule. I like that idea. What you've got to ask yourself now is, are you comfortable with buying into this trend moving down? Because it is clearly still in a downtrend. So it's important, you have those rules in place, and you may be, that may be a good trade for you, okay? And it might be okay for somebody, to say, okay, Google's got this bullish engulf in here. I'm going to trade in this area. I'm going to buy it, assuming it goes long. But you've got to have your stop in there. And maybe your stop is if it closes below these lows, that's your stop. Or maybe that's a good reason to be short. So, you can buy in here with the idea that, hey, it's got to go one way or the other, right? I mean, it does. It can't stay in here for very long. It won't do that. If it moves up, that might be a good place to go long, but you certainly have to respect the fact it's still in a downtrend. I don't know if I gave you the answer you wanted there, Robert. Yeah, I don't know if I gave you. We can talk about it more if you want to ask another question or, whatnot. I can tell you that I am long Google, but I was long Google before earnings. I got caught in the good earnings, not so good, and I'm willing to hold it. I even added to my Google down here. So, I'm like feeling pretty good right now. I may not be feeling good after tomorrow, but right now I'm okay. I do respect it's still in a downtrend, and I do respect that, hey, I'm willing to jump out of this thing right away. Now, here, I don't know, a while ago, a few weeks ago, I declared that I was willing to buy Google at some point and hold it long term. I don't know if this is the place. We'll see. Maybe after tomorrow will give us more of a clue. And I'm just speaking of tomorrow because of the Fed news and how the market, not the Fed news, really. I could care less about the Fed news. It's how the market reacts to any Fed news, okay? So I think we're in a wait and see. But please remember, you have to trade with your rules, okay? Whatever your rules are. That's so important. Wednesday, sorry, I said tomorrow. Ed, thanks for squaring me away. Tomorrow. So, this is one of the things that, and this goes to maybe, are we bullish or are we bearish? That very first question that I asked, and it's okay for some people to be bearish, and it's okay for some people to be bullish. It really all depends how you look at a chart overall, and what is your logic to trading. I mean, that's the answer. If you are a prima bear, then right now, really, you're not shorting too much. If you are, then it might be painful to you. Well, maybe not today. I mean, yeah, maybe not today. But if you were short back here, you're in some agony right now. It hurts. It stings. How about being short right now? Well, what are you basing it on? What the market's not going to like what the Feds do? Okay. I mean, that's all right to be one of your rules. It is. It is perfectly fine. Somebody else might not agree with that, but if that's your rules are important. You got to have those. An example here. Let's come over here to this naked chart. This may take me a minute, but we'll make it work. So one of my rules is trade in the direction of my trendicator. So I can't be short right now. Well, that's not necessarily true. I could be short right now. If we did something like this today, I could be short. We're still above the trendicator, but I could be short that. I could say, you know what? I'm going to go with that candle, and I'm going to take that short. So I use a combination of price action and the trend. My trend is established by those dots right there. So we don't have a bearish candle in here. In fact, if anything, we have nothing but a bullish candle. Bullish candle Friday, and so far we're holding that bullish candle. Okay. Trendicator's green, so I'm going to have to be long. Now that doesn't mean that I have to run out and buy a bunch of long charts, okay? Doesn't mean that. It just means I have to be bullish right now. Now, one other thing I'm going to add, let me see what these are. I don't know why they turn yellow up here. We'll leave that one alone. What is this? We'll leave that one alone. One of the other things that I do is I like the T-line. Right here it is. So let me turn that on. There we go. I like the T-line. The other thing I like is the 3 EMA for the trap. Let me add that on here. It's not on there. Let me do that. Just give me a second. Won't take long. Not too long. So I'm going to change this to the 3. Change this to the low. Low. And let's change the color. Make it some obnoxious color. That is almost too obnoxious. You know what? Let's leave it blue. And let's change the width of it. There we go. That's not too obnoxious, is it? Yeah. All right. Now what I like to do is I like to have the scanner set up to do a show me a trap, show me a trend. You know, what do I want for a bullish? I mean, we're bullish, so I'm going to shop for bullish charts right now. When the time comes, we'll shop for bearish charts. Take CCJ. This is actually coming up on the bearish scan right now. So I'm not in the mood for a bearish chart right now because the market is not in the mood for a bearish trade. So I'm not interested. Now, that doesn't mean that I won't write this down on a watch list somewhere and keep it close by and handy. And it doesn't mean I won't do that, but I'm not going to actually bet on it because the market is not betting on it right now. And what I mean by that is, where's the bearishness? Where is it? IWM, where's the bearishness? It's not there. The diamonds, where's the bearishness? Now, with that said, I'm holding some diamond puts. I bought some Friday not because of any kind of scan or anything. I bought them because this market is way too high. It's as simple as that. No rhyme or reason to anything on the chart other than it's crazy overbought. Close to the trend. Okay. So I did. Yeah. Let's go back to setting up the scans here. So let's look at SSYS. Does it meet my criteria? I'm going to say yes. Oh, this is set to low. Sorry. We're looking at long, so we're going to set this to high. There you go. Look at that. So Trendicator is down. Trendicator is up. Trendicator is red. Trendicator is green. We have a low, high, higher low, higher high. We have a 3/8 trap. We have a flag. We have a pop out of the box. Call it whatever you want. We have a ding-dong Twinkie, if you want to call it that. Yeah, whatever you want to call this. That, to me, is a bullish trade, and I use the scanner to get it. VWAGgy. VWAGgy. Look at VWAGgy. Look at that. Downtrend, you can see that by the red dots. Uptrend, you can see that by the green dots. You can see that we're a 3/8 trap. It's that simple. And the scanner can pull that up. Anything you set it up for. You just set it up for what you like. So let's see. Andre says here, from what you said about the rules, I wouldn't be long Google. Your choice. Your choice. Absolutely your choice. And remember, I also said that I'm willing to hold Google long term, perhaps. So Google's kind of an oddball trade. That might get shifted into my long-term account just because it's Google. And, I don't mind it dropping another $25. I may add more to it. In fact, I'm pretty sure I will. So, Andre there stating that you wouldn't be long. Hey, your rules, your trades, okay? So, thanks for sharing. 2 thumbs up. And the market knows what the feds will say. Yeah, you know what? I'm not sure I necessarily buy that either. I'm not 100% sure of that. The market might think it knows, but there's always a chance of surprise out there. So, yeah. Anyway, it's okay to think that way, however you think. Let's see, Carol. The market does what the market does. You're right. The market does what the market does. Yeah. Sometimes it doesn't make any sense. All right. Does anyone have any charts you want to look at? Anything? Any questions? Justin, thank you very much for asking about that scan. Let's go take a look at some of them. Fox A. Fox A. I'm going to change this back to the low. That's what I use for shorts. Now, this chart doesn't have the volatility stop. Well, I guess we could go to there, couldn't we? Why couldn't we? There we are. There's a volatility stop. There's a 3/8 trap. A trend is a trend until it's no longer a trend. How about SIGA? There you go. Trend is a trend until it's no longer a trend. So it's doing exactly what you asked it to do. Thank you. David there, I'm going to go back to this chart. David is asking about Intel. Well, let's clear off all this. So Intel for me has turned bullish right now. We've got our red dots, and now we've turned green. We not only do we have green, we have a bottom, we have highs, we have lows, we have higher highs, higher lows, higher highs. So I'm going to have to say it has turned bullish. Now, let's go look at the longer term, okay? And if we just do that right there, the longer term is still bearish, but the shorter term is bullish. So you've got to ask yourself now, how are you going to trade this? And me, here's how I would trade it, is, for me anyway, may not be right for anyone else. Anything over 27.53, I'm going to be bullish. So I'm going to wait for the price action to give me a reason to be a buyer in here. And I will trade this up into this trend, or, yeah, up into that trend. Watching price action. And as we approach that trend, there is no way on earth I'd be holding it. So what can we make on it? If it's bought in this area, and let's look at something about right in here maybe. So there's about a 13% possible trade on this, and I would no way would I be in it. It would have to break out to be back in it up into that area. So that's exactly what I see for Intel. To be short Intel, it's going to have to prove it. All I'm asking for is proof. So, what is one of the things that I look for on proof? Is the trend indicator green or is it red? It's real simple. It is extremely simple. Am I bullish above the green dots? Yes. Am I bearish below the dots? Yes. So there's the proof in the pudding for me right now until that changes. So anyway, thank you, David. Appreciate it. Anybody else? Anything we're looking for? Anything we're looking at? For whatever it's worth, CGC, I've been holding CGC and Telray for a bit here. They're working out pretty good now. Telray's up almost 20%, CGC up 12.5%. I've been holding for quite a while. I bought back here, lived through the pullback. These are stock trades. These are not option trades. They're stock trades. So I can hold them an awful long time. Right now, CGC is working out pretty good. Let's see what happens. A little bit to chew through, a little bit, and then, I don't know, we could be way up here before you know it. That's what I'm kind of looking at. Let's see. Bob is asking about PLTR. I love that chart so far. Love that chart. Doing everything I want it to do. You know, the cool thing about trading is take Andre there. And Andre, I absolutely respect what you said about Google, and thank you very, very much. You know, let's say there's somebody that disagrees with PLTR. I'm going to say this is bullish. It's bullish based on my rules, okay? Somebody else might say it is not bullish. Well, that's based on your rules, and that's okay. You know, that's what the market is about. That's a market. The market is about people that agree and disagree on a chart. That's how we trade charts. That's what happens. When there's a buyer, there's a, you know, when somebody wins, somebody loses. When there's a buyer, there's a seller. When there's a seller, there's a buyer. So that's what we do here. Based on my rules, I have to look at this as being bullish. Now, let's talk about an entry. An entry is extremely personal, not secretive, just personal. Somebody here might say, you know, I wouldn't touch this with a 10-foot pole till it breaks out of over 905. There's nothing wrong with that. If that's your trade, that's your trade. I agree with you. If I was to say, hey, this is a buy right now, which I think it is, then I have to agree with that. And trading is simple, especially this type of trade right here. You know, why would I be buying this? This is coming up on my 3/8 trap scan. I've looked at it a few times today. So it's coming up on the 3/8 trap scan. What that means is that it's popping up bullishly in this area right there. All right. That's what it's doing. So it's really, really simple. If you're long this, you are happy. Well, there's too many lines. This is one line. You are happy if it does this. If you are long this, you're unhappy if it does this. So see how easy it is to trade a chart? Super easy. It is. We make it difficult for ourselves. We put too much weight into things. We put too much risk, maybe. I don't think this is risky at all. I think if it meets your qualifications, then trade. You know, if you're wrong the majority of the time, then rethink your trading strategy. If you're long majority of the time, or wrong majority of the time. Well, that's all you have to do. Refine your trading strategy. If you're wrong, if you're wrong 2-3 trades and it's like, what's going on here? Well, maybe go think about what the market is doing. I mentioned this earlier with the market. And I mentioned this to somebody earlier. We were doing a coaching, and I said, look, and I mentioned this to the room this morning before I went off air. Look, I've got office work I have to do this morning. I had coaching I had to do this morning. I had this class I'm doing this morning. So why didn't I buy any energy this morning? I wanted to, but I just thinking, God, I've got so much to do today. I don't have to trade. That was my choice. That's all right. I can wait till the best time for me. And sometimes we get out there thinking that we have to trade every stinking day, 5 times a day. Well, we don't. Wait for our trades just what we want. We can choose to get out of them anytime we want, and that's all right. We can choose to put our stops where we want, anytime we want. We can choose when to take profits, when we want, and anytime we want. We can choose what scans we might use. It's like this one. This is not the top of my list. There's nothing wrong with it. I just don't use a volatility stop. Doesn't make it right, doesn't make it wrong. I have all the respect in the world of this scan. I just want to use what makes sense to me. What makes sense to me is what I use. So sometimes we just overcomplicate trading. It's this simple. It's this simple. If you're buying a 3/8 trap and it drops out of the trap, well, why would you like it then? If that happens too many times, it's not that the 3/8 trap's not working. It's not. And it's not that it's a bad market. No. It's your fault. Stop and evaluate what you're doing. Evaluate the market. For instance, I think it's insane right now to be overly long or overly short with the Fed minutes coming out Wednesday. Now, I'm not one to bet for the Fed or with the Fed or against the Fed. I don't need to trade Wednesday so much. I need to protect what I've made. I need to protect the fact that I'm up on my dash short. I need to protect my pot longs. I need to protect my my Twillo long. Things like that. So I need to protect, not necessarily go trade more. Anyway, sorry, I'm getting off topic here. Whew. Any questions? Let's see. There we go. Justin, thank you. PZVX. All right. Let's just use some logic and common sense. So, Justin, I want to ask you: is this long or short? Let's start with that. I mean, you know what I'm going to say. I want to hear what you're going to say. You want short. Okay. Why not trade it short then? Look, this right here may sound a little flippant to everybody, but this is the truth of it, okay? This is how simple trading can be. Evaluate the candlestick. Because we've got a gap up and we've been up 1, 2, 3, 4, 5, 6 candles, can we say that the chart might be overbought? Yeah, you don't need any stinking indicator to tell you that. If we end up today with a shooting star, which this is right now, logically, what could we do today? We could short this, couldn't we? And Justin, by the way, for both rooms here, you want it short. That's what he said. So short. So what would tell you to not be in this chart if it started moving above today's high, right? How tough is this trade? This is not a hard trade. So if it was bought, let's tighten this up just a little bit, bought right now, you're looking at approximately a 5.8% risk. All you've got to do is ask yourself, can you handle that risk? The answers are right here in this chart. Now, Justin says over here, extended and exhausted. Does it have to be? No. Can it go up more tomorrow? It can. But what are the probabilities here? And I'm going to have to agree with Justin here. It's looking like a short. That's how trading is. It's just having some rules out there and really some good common sense. Good common sense. Now, somebody could say, well, jeepers, look at the big volume in here. That's a bullish chart. It might be bullish down the road. I tend to agree with Justin. We're going to see a little bit of a pullback. So what do we know what the charts do? And if you don't know this, then honestly, you've not looked at enough charts. But we know charts do this, right? We know bullish charts will do something like that right there. So the next move from here is likely to the downside. That's just common sense. If we're wrong, we're willing to risk 5.8%. So, Andre says, risk reward is not that good. Well, let's go find out, okay? Let's just set that up. Andre might be right. I don't know. So right now, we're risking 5.8%. Where do we think a target is? How about we come back and test those lows right there? That seems fair. That's a 38.6%. That's more than a 3-to-1. I'm going to say risk reward is just fine myself. But then again, every trade is for every person, or every you've got to decide what trade is for you. Maybe this is not a trade for you, Andre. But if you're going to talk risk and reward, not good, that's what I see as risk and reward. 5.8 versus 38%. Now, on the other hand, if you feel that this trade is only going to come back to right here, I agree with you. I don't want a trade that's 50-50. No. 1-to-1 there. I don't want that. So, anyway, it's all how you set the trade up, what you see there. Anything else? Really, trading is super, super easy. We let things get in our way. We let things get in our way. We let news get in our way. We let what between our ears get in our way. We let too many indicators get in our way. Too much of that. Let's look at this chart that Justin asked for. Let's look at Microsoft here. It's real simple. It really is. Now, I'm not saying this is a short. Please do not get me wrong on this. But let's look at the chart based on just say what moving averages I use. And I love using moving averages. So we're the trend indicator, we're below that. That is a big thing for me. And we're below the T-line. That's a big thing for me. So let's short this, right? Let's pump the brakes just for a minute. I also love price action. So I'm looking at this chart. Look at that big old bullish engulf. Look at that rise. Look at that pullback. So what do we have? And look at that bullish engulf. So what do we have here? We've got ourselves a low. We've got ourselves, well, heck, we could actually do this, couldn't we? We've got ourselves a low, a high, a higher low, a higher high. Okay, there's where it broke. We broke that higher low. We've stopped it with a bullish engulf, and now we can take a different view of this, a low, a high, a higher low, a little longer term. Am I going to short this today? Not on your best money. Am I going to go long? Not on your best money, I'm not. I don't have enough information on this chart. See how simple trading is? Information, that's all you need. I'm getting information right here through the scanner, and now I can use information that I know from the time in trading, excuse me, the time in trading, I know to maybe be a little patient on this chart. Now somebody else might say, hell no, short it, and you might be absolutely right. You might be. Somebody might say, heck no, go long this chart. And you know what? You might be absolutely right. It's about what information you have. It's about what information you use. So while somebody might look at this long, somebody might look at this short, somebody might, like me, might look at this like, I don't have enough information. I don't. Excuse me. Apologize. Fighting a cold. Grandkid babysitting this weekend too. It does it every time. Let's see, Andre. But if the market is overbought already, is it too risky to be long? No. Well, yeah, to some degree it is, Andre. But the market can be overbought a whole long time. I mean, it can be overbought in an insanely amount of time and still moving up. Overbought, in my personal opinion, by the way, overbought is where I make most of my money. Overbought means the market is working. So, but that's just my own logic. Right, wrong, or indifferent, that's my logic. A market that's oversold is been moving down. It doesn't move up until the buyers step in, and it can be overbought in a heartbeat. Look, and I don't disagree with you, Andre. I think I know what you're saying. Take the diamonds. Why am I holding puts on the diamonds? Because I think it's stupid overbought. Okay? On the other hand, what does that mean? Does that mean that we pull back? Well, it could mean that. Now the question is, do we pull back here? In which case, we're still going to be overbought. Newsflash. Are we going to pull back to right here? We're still going to be overbought. So the chart, I mean, are we overbought here? Yes, we are. We pulled back right into a beautiful trend. So are we overbought? We are. Can we pull back into the T-line? We've seen this happen 1,000 times. Is this going to make it not overbought? No, it's not. It's still going to be overbought. But yet, that's what trends do. So I agree with you. We're overbought. But what does that mean? What does that mean? And so anyway, there we go. You're very welcome. And thank you so much for the conversation. Truly appreciate it. Well, Eddie over here says diamonds overbought in an uptrend. I agree with you. I'm sorry, downtrend. My bad. Downtrend. Okay. Look at the other side though, Eddie. We've got a relief rally. You cannot argue that it's trending right now. It's impossible to argue that. If you argue that, then you are 100% a diehard bear, period. Now it's overbought in an uptrend, isn't it? So, what do you do? What do you do? How about we forget the whole overbought, oversold, hold sold thing and just follow the chart? Let's do that. Let's just follow the chart. I agree, though, we're overbought. Okay, I don't disagree that at all. I'm just trying to point out, be very, very careful, because while we are in a downtrend here, we are in an uptrend here. I can't tell you which way we're going to go. I cannot. If the markets take whatever happens Wednesday poorly, we're going to move down. That's got nothing to do with being overbought. That's got everything with what the Fed says and the market not liking it. Okay? And the same with oversold. We could say the same thing. There's a reason why I don't use oversold and overbought indicators. They do not tell you the truth. That's that. They don't. The trend tells you the truth. Trend. Juspin says shop. What about shop? 8 crossed the 21 over resistance. Over some resistance. Now it's looking at more resistance. Okay? I just want to make sure that all the cards are in the table. You're right. It's over some resistance. Now it's looking at new resistance. It's a nice chart. I like that chart. So now it's a matter of waiting for the setup. We've got a low, high, higher low, higher high. Trend indicator is green. We're over the 50-period moving average. Pull back. Wouldn't that be nice? That would be a great, I don't know why this is not working. Anyway, that would be a nice 3/8 trap setup, or a bounce off the T-line, or possibilities, bounce off the T-line, bounce off the 10 simple, bounce off the trend indicator type charts. I love using, on the scanner, by the way, I love using that bounce. For those that have the scanner, using the bounce setup, I think is very nice. Bounce off a moving average. Eddie, you may be right. The chance to overbought in a downtrend to pull back more than in the uptrend. I Maybe let me make sure I see what you're saying here. You're saying there's a greater chance of pulling back. I agree to that. And right now, if we pull back to this uptrend line, then I'm still bullish. If the market was to do this right here, right now, pull back, I'm still bullish. I'm not bearish. If the market pulls back another day, I'm still bullish. I am not bearish. If the market pulls back, right, I'm going to go right to that line, and I'm just following the trend indicator here, that's all. If it pulls back, I'm going to be nervous, but not bearish. If we break that, I am now bearish, not bullish. So this, little things like this don't matter to me. That's part of building a trend. If the trend actually breaks, then I'm going to be to the bearish side. So are we overbought? Yes, that's why I have diamond puts here. Do I think there's a pullback? Yes. I'll take it right until I think I need to get out of them, in case I think we're going to bounce off some sort of a trend here to the downside. But yeah, I do think there's more likelihood of a pullback, or at least consolidation to the right, than there is of breaking out. And I think right now the market is likely to do absolutely nothing until Wednesday afternoon. And then that's where the rest of the story will come out. Are we going to be bearish or bullish? I can't guess. I can assume for a moment that the market's not going to like another rate hike. Well, the market already knows there's going to be another rate hike. What the market doesn't know really is what the language is. That's where I think the importance is. And that's where we may see a little disturbance or a big move up. I can't predict that. I don't know. Andre says we now have a bunch of 3/8 traps setting up. Yes, we do. We have an awful lot. And I'm not sure, should I take them because of overbought? Well, Andre, I gave up looking at overbought and oversold long ago. And when I did that, I became a better trader. Okay, I really did. Oversold and overbought is nothing more than you've pulled away from a trend too far. That's all it is. So why do I need to look at that when I can look at any chart that I want to look at, and I can tell you if it's too far away from the trend? Take a look at Sting. What does overbought or oversold in the market have to do with this chart? And I'm going to argue nothing. And I'll show you why in a minute. I'm going to argue nothing. First, let's look at this chart. We're trending up. I don't think anyone can argue that fact. We've broken out here. You can't argue that fact. I'll win on this one. So far, I'm winning on this. We've broken out. We've pulled back. We've tested. We've went up, but we did not make a new high. So, there's one there. Here we're back down. We're holding that support with so far more buyers for today. All right. So this is a bullish chart. All right. The market is overbought, right? Well, I don't know. Is it? For me, my market is the SPY. It is not the diamonds, FYI. So I'm looking at the SPY here. Whether it's overbought or not, look at the chart. What about the chart suggests this is overbought? We've very calmly moved up, very calmly moved back, very calmly moved up. We failed the 50-period moving average like clockwork, went back below it, regrouped. We closed over it Friday very calmly, and today is a calm inside day. Nothing about this chart is suggesting overbought. So, can I trade Sting? Why not? Everything's working. Why don't I? Because I think this is a horrible time to trade right now. There's too much risk out there with Wednesday Fed Day. And Andre, I don't worry about overbought. I follow the chart. What would make the SPY overbought? Easy. Go look at the diamonds. That'll tell you. Look how far we've pulled away from any reasonable moving average. I don't use RSI. And I'm not knocking RSI. I'm not knocking stochastics. I'm not knocking that. I'm just saying I learned a long time ago, just trade the chart. And we trade pullbacks into what we think are important moving averages. That's why the 3/8 trap is such a good trade, is because we're looking for charts that pull back. If we consider this overbought, if we pull back, then I'm by normal RSI or stochastics or MACD, whatever, that's not going to be oversold. How many charts have you seen that just keep going up and you're sitting there on the sidelines because that indicator says it's overbought? You know, the same, I don't use volume. And I hear about this, several times a year where I'm going to set this up so I can talk about it. So say volume is declining and the trend is still going up. And somebody right here says, let me change this to red just so it shows up. Somebody here says, well, we can't be long because the volume is declining. Well, a week later, well, we can't be long because the volume is declining. Well, guess what? A week later, we can't be long because the volume is declining. Well, doggone it, let's do it again, right? We can't be long because the volume is declining. In the meantime, that same person just lost a buttload of money or didn't make it because they were too wound up over an indicator that's as slow as molasses. The answer is in the chart. A clean, simple, pure chart. Trend and price. That's the answer. It's not the headlines. It's not the indicators. It's nothing like that. And RSI is the same way. Any indicator. You can be fighting that indicator, and I'm not saying they're always wrong. They're not. They're not. But all those indicators they get their information from this chart right here, from the chart price action and trend. So if we trade something like the 3/8 trap, and it's on the scanner, if we trade something like that, then we're always going to be trading charts that have risen and pulled back. So while it doesn't matter what your RSI settings are, you're always going to have no matter what your RSI is set at, you're always going to see your RSI rise and you're going to see your RSI drop. Now, it may not drop into what you think your perfect numbers are, but it will drop and will be into trend. And that's where we want to buy. Take DOW for an example. Now, this might not be a buy, but the trend is there. I can no more tell you, man in the moon, what RSI is doing, but I'll bet you somebody's RSI right here was probably too high. I can't tell you that your RSI is in the right spot right now. I don't know. I can tell you the trend is there. I can tell you that if the market was to move up tomorrow, Wednesday, Thursday, Friday, what would stop this from moving up? Only the fact there's no buyers and not following the trend. So I'm not here to crap on your RSI or your overbought, oversold. I'm really not. I'm just pointing out that the trend is where the answer is. And that's something I've been trying to say through all this, this recession, everything is the headlines. And anyway, so let's see. Wednesday is 2 days away, but the 3-8 trap is already here. Ooh, what's the value of the 3/8 trap Wednesday? What's keeping you from trading it? What the value is? It's a 3/8 trap. What would keep you from trading it? Fed? Well, then don't trade it. The answer, you wrote the answer, Feds. Why do you have to trade Wednesday? How about you and I go meet for a beer somewhere and just let the market duke itself out? Why do you have to trade Wednesday? Man, I'm thinking we find a meeting place in between where we live and let's meet at a bar and have a cold beer. Let everybody else. You want to trade now? And there lies the problem. There lies the problem. Everybody wants to trade now. You can trade now. Why can't you trade now? Why can't you trade Pepsi? It's a 3/8 trap if you want to trade it. Why can't you trade it? EPD. It's a 3/8 trap if you want to trade it. You just have to have the brass ones to do it a day and a half ahead of the Fed meeting. Well, like I say, go ahead. You can trade it. Apple. What's Apple doing? Apple's a 3/8 trap. What's wrong with trading it? You just have to have the conviction. That's all. And by the way, I get all my trades from the scanner. Somebody asked me yesterday, weekend, I had an email. Where do I get all my trades from? And they said, do you get them all from the scanner? Yes, I do. I get all my trades from the scanner. When I do webinars, my webinars tend to be live, just like this one. So as an example, I did a webinar here for the folks at Tradier and TradeHawk last week, and it was midday, and it was live. In other words, I'm looking at charts. I don't clip charts and put them in a PowerPoint. I don't search for the best charts so I can show off. I use the scanner live during the day to do that. I have a webinar. Now, here's a case where I might not be able to. Let's see. I have a webinar coming up. No, I have a webinar coming up on the 8th, I believe it is, and that's Tuesday. So that's where I may do a little show and tell with static charts on a PowerPoint, but we can switch to live charts. And that's because I have the confidence in the scanner. I have the confidence that I can look at a chart or look at the scanner, and if the chart, if it's giving me a chart like PXD, I can tell you that it's a 3/8 trap. Now, what the scanner does not do is it does not tell you, or should I trade this chart? That's up to us as traders, not necessarily the scanner. But the scanner, I've asked for it to give me a trending trendicator, a trending 34 EMA, and a 3/8 trap. I'm sorry, not this one. This is a 17 bounce, excuse me. This is a 17 bounce. So while it was a 3/8 trap earlier today, it's in my 17 bounce scan right now. So anyway, I've run over my time. Ed's flashing. Get out, get out, get out. No, not really. He's not. The scanner, if anyone has the trial to the scanner, if you could post it. I saw John posted one earlier. John, if you're here, or Malcolm, or anybody that has a link to the trial, if you could post it, I would be very appreciative. Very appreciative that everybody is here today. I know you have other places maybe you'd like to be. Thank you, John. I know you have other places. But I do thank you for being here. Thanks for Andre. 2 thumbs up. Thank you. Our conversation absolutely fantastic. Thank you so very much. And everybody, give Andre a hand there, because that's right there is good round table stock trading talk. All right, right there. Yeah, yay, Andre. That's good round table talk. So thank you very much, Andre. Appreciate it. Justin, thank you for asking for this scan right here. I appreciate it. All right, everyone, take care. Thank you very much. We'll see you all next Monday, or maybe in the trading room. And you guys all take care, all right? Thanks so much for being here. Bye-bye.